Hey guys, Blackwatch here. Just going to do a video on the open plays. So you have a New York Open momentum play and you have the open reversal play. Now these are they're trade ideas that fit into your arsenal, but they're not going to work for extended periods of time. Sometimes one is on, one is off, sometimes none are on, and we're just focusing on break theories and structure. With the open momentum play, it's basically based on NASDAQ. These are both NASDAQ plays. I've not tested or traded it on any other asset, but with NASDAQ futures, sometimes the market will open in a direction and it will continue in that direction. Sometimes it'll open that direction and it'll just pop and completely go the other way while you're waiting for structure to play and get a confirmation, and often just goes right through it. So both of these plays are based on the idea that the open itself has a lot of volume, but it doesn't always give us structure. And sometimes it'll run, and without a break theory, it's hard for us to get in. So this is a way that was formed based, again, around the same concepts of Heikin Ashi and regular candles to help us determine when a shift is coming and when to get involved at the best possible position. So we'll go ahead and look at the charts here. Let me turn this off. And we'll just go ahead and look at this kind of first example. So again, a lot of it has to do with the 5-minute Heikin Ashi and then the M1 confirmations after the fact. So this first one happens to be a reversal play in the sense that, if you can see, let me just make this a little bit darker maybe. So this is New York Open, 8:30 Central. You can see the opening candle runs to the downside. Now, this has nothing to do with what's happening to the left here at all, right? In this particular case, there are sometimes there's going to be structure here, and it's going to make sense to get short from this level because there's structure. But in this case here, there's no structure that we're playing from for an open. It has everything to do with what's happening right here, right now. So price rips to the downside, right? You can see there's a trigger to the downside on that open play, but there's no 9 EMA momentum. So what ends up happening is this turns into an open reversal play. So you rip to the downside and then you fade it the other direction. So as soon as you get an M5 confirmation candle indicating that price wants to go the other way, what you can do is one of two things. One, you can take an entry on the trigger itself. So I'm going to go ahead and I'll replay this. Reduce my size. So I have a trigger. I've got this as well. One thing to keep in mind with the open play is that the volume and the volatility is very high. So generally what you might find later on in the day for an entry position of, let's say, one mini contract might be like $250, $300. On the open itself, it may be much, much higher. So you have to keep that in mind and make sure that if you are, limiting that dollar risk, you need to go to micros, but this is just purely for example. So you enter on the trigger, that'd be position 1, play price forward, and now at this point you're looking for a M1 push momentum candle off the 9 EMA after the M5 candle is closed. Again, there's no structure, there's no real M5 idea. The entire idea here is that it ripped to the downside, push back to the upside, and rather than waiting for some sort of like break theory play here, although this wouldn't be valid because this low goes here, but imagine this low held and it didn't break. You'd be looking for a break theory here. You'd be sitting waiting for a confirmation candle here, and then it would just rip straight through. So the question was, how do we get involved? This happens a lot. So this would be it, essentially understanding that sometimes price goes one way and then it flips back the other way. So you can enter on the trigger. A lot of times what I like to do is you can enter on the trigger because adding a starter position is good and then scaling in is good because pricing will be better. But there are times where it's just like, I don't know about this. I don't know how I feel about it. Let me just wait for the 9 EMA to bounce and to give me a momentum candle. So again, we want the buy candle to be bigger than the sell candle, and we need it to interact with the 9 EMA, and we would like price to generally have a positive slope in the like upward direction or negative downward direction. We just don't want price to be sideways, right? We never want to trade sideways price. So you can scale in here. You can scale in 1, you can scale in 2. I typically, 675 is my current risk. So what I'd like to do is buy one. So I've doubled. And then what I can do is, if this is my buy candle, the previous bar low is generally what I'm covering. So I cover that within reason. Now I've got double the size with the same amount of risk. That's kind of the entire idea here. So a couple ways to manage, right? So from the low to the high, we're measuring 45 minutes. At 45 minutes, we start to look at volume to see where we are. But once you're in trigger and then you're in scaling, for me, it's pretty important to just completely leave it alone. When my timer goes off, I can get involved, go from there. This isn't the way I'm going to delete it for now. But when you have a momentum play, you have the timing aspect for your M5 leg, 45 minutes, start looking for volume depreciation to fall off, and then you can choose what to do. You can, if there's no M5 structure here, so we can't use M5 structure. Alternatively, on the open reversal plays, price often likes to run for the main structure, high or low. So you can TP right here if you'd like to, or you can hold it for the 45 minutes and see, or you can go to this high and then whichever comes first, 45 minutes or this target goes, you close it. So we'll play this forward. And again, there could be other 9 EMA plays. I do not care. I'm not interested. At that point, I want to be in, and then I want to be done trying to get in. That's where all the mental stuff comes into play. You have to deal with whether or not you are in a good position to, let's go ahead and go to that 45th minute right there. So this would be it. And then so at some point, now here's the thing with break even. There's no M5 trade idea, no sandbag. It's not a momentum play where you're trading the second candle break for a break theory or for break even. This is an M5 open play. You have to let it go. You gotta let it breathe. Now, a lot of times what happens is you get this momentum. When you get this momentum, this is a good time for you to go ahead and break even, okay? But don't do it when you're in the chop, because it's still you wanna give it the time to breathe 45 minutes. So that'd be it there, 45 minutes hits, we're over the high, happy to get out, right? Obviously, really good trade, not much more than that. You don't have to do anything else. You're done with your day in the first 45 minutes. Let's go ahead and just, let me clear this out. Let me find more of an open momentum play. All right, so this one, right? I know I have the volume profile off, just pay attention to structure now. This one opens to the downside straight away, but what you have to keep in mind that this has actual structure here, whole substructure there. This is actually an M5 break theory play, not an open reversal or open momentum. So we're gonna ignore that for now because we don't need to look at that stuff. Here's one where price opens to the upside, immediately rips to the downside, and then just kind of ranges out. So again, this play to the upside, no trigger to the upside, sideways price action. You have price trading below and above the 9 EMA, so it stays sideways. Here you have that sell candle, there's no trigger, and there's no 9 EMA to the downside. So there's really no reason to be trading this. I also believe, probably shouldn't have deleted the SVD. Yeah, all right, I'll have to add the session volume profile on after. But you basically have highs and lows going over and over again here. This is going to be a D-shaped volume profile, so you can pretty much ignore price anyway. Obviously, this does rip to the downside eventually. The way you would catch it is not easy. It's all within this buy sell leg here, but you have to deal with all the substructure, up, down, up, down, up, down. It's sloppy. It's really messy. This is not something easy to catch, because even here on the substructure, you'd have price going to the upside, and you're like, all right, let me just mark this as if we're going up. Gap trigger, no 9 EMA play. Would you take it? I don't know. And then it flips to the downside, and then you get this sort of gapped but reasonable sell candle for your trigger, and then no 9 EMA play because there's no momentum candle, and then at this point it's already gone. So this is a day where it's a lot of movement but no signals to get in. Here, this is a good example of open momentum. You can see price just go to the upside, and it continues to go to the upside. One thing that helps me to decide what I want to do is whether or not we get 9 EMA momentum. If we don't get the 9 EMA momentum, then I'm generally not too interested. I might look for the reversal. Now, one of the things I didn't mention is that open reversal play, it has to happen, give or take 5 minutes or so, within that first 30 to 40, 45 minutes. It's not a hard rule. It's more of a guideline. Sometimes it happens earlier, sometimes it happens later. But once you get past that 40, 45 minute mark, that's when I'm really wary of not taking any reversal plays. I'm usually not too interested. So in this case here, right? So we get momentum to the upside. The open candle is bullish. There's no trigger candle. However, on this very next candle here, there's a momentum play to the upside. Now, I do not take the momentum candle on the opening of the next 5 minute candle. So that's basically, if this is your trigger, this is your momentum candle, I don't take those ones. More often than not, they don't work. But the reason I don't take this, outside of the fact that they don't work, which is a big reason, is that if there's no trigger here, I can't say on the next candle like that's the right one, because that kind of, it defeats the purpose of the trigger pretty much, because you're not really paying attention to this candle anyway. So what I do is, again, I wait for price to ride the 9 EMA, and I'm looking for a sell candle where a buy candle takes over. So let's go ahead and our replays. Right, so no trigger, but we're still switched on because price is sloping very nicely to the upside. So we know with the open momentum play, we could get a setup. Price starts to push up a little bit, but it kind of has a little trouble, like really letting the buyers kick in. You get a nice sell candle here, and then what do you get? A momentum candle. You still have a good positive slope. So what do we do? Now, here's the thing. I don't have a trigger, so how do I trade this, right? Do I scale in at all? Do I just put one on and let the trade go with low risk? What are we doing? This is a totally personal decision, okay? If you have good momentum and good like slope at the 9 EMA, and you're seeing what you want to see, what this is telling me is that there are 60% buyers, 40% sellers, 60% buyers, 40% sellers, 60% buyers, 40% sellers. Is it the same here? Yeah, because we get this little sell, and then all of a sudden we're taking over. We are showing that aggression on the buy side, and that's what's telling us to get involved. So we get this. Now, normally if I do a full 3 position, I might do, let's just see what 1 looks like, because I'm only covering the previous bar low, 230, so that's not much, right? So if I average 500 in risk, I'm cool with 2, okay? So then management, right? This, even though it's a doji, it's the last sell candle. So we have 45 minutes from there, which is where we begin to monitor things. You also have the option to do fixed R, but with fixed R, based on how we trade, previous bar low, it's going to be significant. It's not 2R, it's not 3R, it's 5R, okay? Right? So you have the option to just clean out at 5R, be done. You have the option to manage risk at 45 minutes and see how the momentum looks. If the momentum looks good, generally you're going to hold it for the full hour. Obviously this keeps going, but we don't need everything. So in this case here, if I TP up here, that's risking basically 460 for 2,000, which is very good. If we just let it run, and I'll just move this out of the way. For the 45, we'll see where we go from there. So again, this previous bar low should be protected. If it's not, we're wrong, and that's it. We don't keep chasing it. It's really, really important that after you get the M5 confirmation candle on any play, M5 break theory, momentum play, or open reversal, is that you take the very first 9 EMA that is offered to you. Anything after that can be pretty sketchy. But again, you're in and then you're ignoring it. So here's another 9 EMA. Right, we're not scaling in. If we're not in here, we can try to get in here. Now the previous bar low is higher than this current low, so you would actually just put your stop loss just below that. But now you can see, right? That takes out the low. This is what this one. This takes out the low, right? So you'd be taken out. This is why it's really important. Really, like, I can't stress this enough, how important it is to take advantage of this first one. You also need to be really focused, because if you don't execute on time, as soon as this candle closes, you are executing somewhere up here. And that's not going to work, because look at my R now. So let's say this is 5R. That's based on the close of this candle high and the previous bar low. If I have this anywhere higher, even just to that wick, that's 4R now. Now all of a sudden this is 3R. The risk to reward gets shot in a matter of seconds. So you have to be really on top of it. So obviously this goes to that level, 45 minutes. We're assessing momentum. This looks really clean. This looks really clean as well. So now it's a matter of saying, okay, what do I want to do here? Do I want to take some off? Do I want to leave some on? I think it'd be okay to, one, definitely break even, but two, take one off, okay? And we'll go, and then we hit the 1 hour mark right there, right? So now we have to make another decision. What do we do? I'm going to close this, right? It keeps going. Wonderful. Cool. I don't care. It has nothing to do with the position. Obviously, 7.5R is ridiculous. Okay. So I want everybody to get into the habit of, one, executing really well. Focus on good execution. From there, work on increasing that risk a little bit. You don't have to put a full 1% on this kind of play, because I know some people are really skeptical of the 1 minute movement, and it's hard to build confidence in it. So I want everybody, if you're not feeling totally confident, to reduce that risk to the point where it doesn't matter if you lose, but if it goes, it'll move the needle a little bit. Then over time, just work on adding more size to it. So that's an open momentum play, okay? This is kind of a similar one. We had M5 structure pre-market, so something to consider. This is the open candle here. So let's just look at that. No trigger, deep pullback. And what do we instantly get? We get this sell candle, a big momentum candle to the upside. So what do we do here? Are we looking at the momentum play? Are we looking at the reversal play? Now the reversal play, again, I've got a whole like 40-ish, 45 minutes for it to drop off. You can see this is much too late. You can see how it doesn't commit anyway, but it'd be too late anyway, so you wouldn't be looking for shorts there. Ideally, you would catch a momentum. So when it comes to order of operations, obviously pre-market structure, if you can get in here, that's great. You got to deal with the market open volatility, which can be dangerous though. So keep that in mind. But you're going to prioritize the open because that's the first thing you're going to get. If you get the reversal, you'll go there. From there, it's all about break theories and everything. My kids came in, so I've kind of lost my train of thought. However, market open play, right? Structure, prioritize structure, always prioritize structure. This is market open though. Gotta be careful of market open volatility, but you have, right off the bat, you have your M5 confirmation candle to the upside. So you're gonna, order of operations, stick to market open, momentum plays, look for the reversal, and then structure. This is, again, a really good way to get involved in that market open when it just runs and there's no way for us to get in based on structure. This is how we do it. Again, all we care about is confirmations. We get M5 confirmation candle. We get a continuation in the sense that we have a trigger candle or the 9 EMA. It's all information that tells us like, hey, the idea and the direction is correct. So we got to keep going. So no trigger, deep pullback, and price does trade back up. And again, our 9 EMA is showing a nice positive slope to the upside. We get a sell candle here, a momentum candle there. This is our entry, okay? This one's a little funny because we get that deep pullback, but you can see this actually stays bullish, right? So this is good information for us. If this had went bearish, it gets a little funny, right? Because usually the momentum play is just gonna go. But we do keep a bullish candle, so it's totally fine, totally valid. Now, you'll notice I'm not using Heikin Ashi and all on this, because really all I care about is I need that raw data of what price is doing, and I need that sell candle and that buy candle. The problem here is that on Heikin Ashi is that you don't get a pullback candle because it's averaging. It's all bullish price, bullish, bullish, bullish. You get one little tiny sell candle and then a bullish candle. So it's all averaging to be bullish, so you don't get that color change. So I'm focusing a lot more on the original candle in this regard. So again, we can do this. We'll play it from here. We don't get that trigger candle. We're still switched on because we're still bullish. We start to sell off, and we might sit here and wonder like, hey, are we going to get a reversal play? All right, so you'd sit here, let's just say it's kind of bearish to start, but then it starts to turn bullish again. Like, okay, there's no trigger, no 9 EMA to the downside. So I look here, it's still bullish. Now I get the 9 EMA to the upside. So I'll buy, cover the previous bar low, 500, that's good risk. Or whatever, you know, that is for you guys. And again, what do we do? Now, market opens here, but the last pullback is here. So 45 minutes there, 1 hour basically at the high. So we'll go 45 minutes, start monitoring some stuff. We have the opportunity as well for, again, fixed R of 5R. Where are we? 5. Now, when I'm doing a fixed R, I'm doing like purely technical. This doesn't include spread in any kind of manner. It's literally just drawing the tool on to say from the low, very, very, very low, like choke it up. Like I draw this literally to that low, it's locked in there, to this very high. Where's 5R? I'm not looking at, oh, well, I kind of entered up here and my stop loss is kind of down here. Where's 5R? It's just purely candle close, actual low of that previous bar. Where's 5R from there? That's all I'm doing. So please keep that in mind, that the actual result of the trade is not going to be 5R. It's going to be slightly less, just because your stop loss spread, you can't put it right here. You got to put it here. Your entry might be up here a little bit, stuff like that. Okay. This is why, though, it is ultra important to make sure that you are super focused on your executions. So that's 5R. And then of course you have 45 minutes, 1 hour, and you have to decide where you're going to close at. So we'll move price forward again, looking for that momentum really before I can break even. That's a lot of momentum. I'm happy with this. This one here is good momentum, but we start to sell, die off a little bit. So we just got to make sure we're still going. This is totally fine to break even. 45 minutes has passed. Again, a lot of momentum. So I'm going to want to hold this thing for at least an hour, see where we get. Go, 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 go. Okay, last candle, 1 hour. Boom. Okay, so we're starting to sell off at the hour. So again, at this point, I'm happy. One contract, 1,500. That was great, right? So let me see if we can find another open reversal play. We'll kind of go back. There's definitely one. Again, sometimes you get nothing. Sometimes you get an absolute trash price. This is garbage price. It's D-shaped from the get-go. Highs low, high low, high low. Yeah, I don't have the thing to show it though. Okay, here's an example of maybe both. Open, play, no momentum. You can see right here, right? You get this guy, sell candle, big buy candle. It doesn't interact with the 9 EMA, and it's just too far. It's too far away. So like you see this, right? Oh, you get a sell candle, a big momentum candle. Should you buy that? No, definitely not. Like you want relatively immediate price action. Also, this slope is way too aggressive. Like this one here, this is hard. A slope like this is way more manageable because you are likely getting pullbacks into it with setups. This is just a rocket to the upside. That's really hard to trade. So we have no edge in this particular market. And if you take this trigger, your stop loss is going to be huge. At market open, it's going to be absolutely monstrous. I bought too early. That's fine. Yeah, that's not doable, right? Obviously, you can go to micros, but if there's a gap trigger like this on a big range, I'm usually expecting a pullback. We can get a pullback here, but more often than not, you're going to get one. So here again, from here to roughly here, that's 45 minutes. So I'm aware, and I'll show you, like if you look at current price, I'll show you that I have a box around the window. Oh, it's basically this dashed line here. It's showing me the first 45 minutes of market open. So if we get that flip in the right time, like we start to sell off, we're showing some bearish candles, it runs bullish last second, and then I'm here, and if I get that flip on that time frame, I can now start to look for the open reversal. Now, this candle is on the 45th minute of this time frame. The setup comes slightly after. That's fine. Okay, as long as the confirmation candle is within that window. So here there's a trigger, so we can sell one. Cover the high, good risk 400. Again, I'm not interested in anything right here, but once we get like a 2-3 minutes out, I'm interested again. I'm looking for interaction with the 9 EMA. There's my buy candle into the 9 EMA. All I need is a good momentum sell candle to kind of beat it. So you can see the the low of this buy candle, it's here, and the low of the sell candle is here. So we have our 9 EMA interaction relatively close to this. We are within the confines of our reversal play, and this I would say is again 40% on the buy side, 60% on the sell side. Momentum, I'm happy with that. So again, what's my risk? 340. So we sell another one. I'll drop this down. Now what's my risk? 260. So I can actually add another one to keep it roughly in the same area. Now I've got tripled the size for roughly the same risk, right? Again, with the open reversal plays, there's a couple things you can do. You can go for the previous low. You can run it for the 1 hour. Check your volume at 45 minutes. You can do fixed R for 5R. Previous bar high is here. 5R takes us here, which actually shoots us in the foot. Obviously this is very large, but this is where 45 minutes takes us. This is why I really like it when price just, and this is, at this point price is ripped, so yes, I'm gonna break that even. All right, 5R, you can even TP partial, you could take one off there maybe. But everything in between, I'm not interested, I'm not looking at, right? The open reversal play, if you have a large expansive range, often will go for the higher low. The open momentum play, the open momentum play though, will, that's more of a timing thing. 45 minutes, 1 hour, and then maybe fixed R, 5R, right? But the open reversal, right, if it's a larger range like this, it will very often come for the previous higher low. All right, so there's that. All right, and again, at this point, you're not really paying attention to it. You might want to monitor it, like you might put some alerts on down somewhere at the lows just so you know you're coming up on it. Now, the main TP technically should be this guy down at the low. At 45 minutes, we get here. So it's kind of like, all right, well, hold on. Like, what's the difference between that and that? Where'd my trade go? Oh, shoot. Oh, let's just do that. Sell one. We're up here. Sell. We know we're good for 2. Get that risk way down. TP down at the low. You could, if you wanted to, you could take one off there. It's gone, so you want to break even. And then, yeah, you're pretty much letting the rest just do whatever the heck it wants to. If we get down here and we start pulling back like that, though, that's a little dicey. Eventually it gets there because the system says to aim for that. But yeah, obviously that's a great trade, but it's only risking 3R or 3 contracts, but ultimately you're only risking 400. So this model is insanely strong because if you do it properly, you will risk next to nothing for a lot, as long as you manage it well. Like the other week I had a trade, I think I put 250 on risk on. It was like a $4,000 trade. And it's just like insane to me. But those that are scared of the 1 minute, I have to encourage you to do this the way that we're doing it here, because it's just really, really important to understand that the risk to reward on this setup is just insane. You have the open play, you have the reversal play, you of course have break theory and structure, and it's played all the same way. When it comes to the break theory side of things, you have a few more opportunities to get in with like the box play and stuff, but at the end of the day, if you look for that very first 9 EMA play from any of the moves, that's generally where you're going to get the most bang for your buck, because it's going to be a small candle with a decently sized or decent, you can add decent size onto it because it's going to have such a tight stop loss. Obviously, you need to worry about spread. So just keep that in mind if you're trading with CFD brokers and FTMO and those guys. But futures very little spread, so you can, for the most part, you can choke it up pretty good. But yeah, basic rule of thumb is M5 confirmation candle on the open. Look for the trigger and the very first 9 EMA play. Get in with a starter position, because if I take a starter position here and it goes against me, I'm wrong. I'm only losing. What is this? What was the first position here? If I sell one, I lose 400, right? But if I stay involved, that's one contract, right? One contract down here, that's $3,000. Obviously, really good. But if you can stay switched on and you can focus enough to get a good scale in, you can triple your size and keep the same risk level while also basically tripling your target, your profit level. So I don't know. I know I'm kind of like beating the dead horse here, but I can't stress how important this is, because you could take 5 losses in a row, 8 losses in a row, and then you can be instantly in the green by a lot just by properly trading the levels. We can look at this. So obviously no real structure. Price is kind of all over the place. The bullish leg, bearish leg, it's kind of going all over. Market opens. You get your M5 confirmation to the downside. And sometimes you lose, sometimes it doesn't work out. It's fine. Okay. Oh, well, so here's another example, right? There's a trigger. It's a pretty decently gapped trigger. I'm not too interested in a gap trigger because I often get pullbacks. Sometimes I'm wrong. If it doesn't open reversal right here, then the size of my stop loss is massive, and then I gotta reduce, position, and sometimes it's just not worth it to trade. So what you can do again is you can just wait, just see if you get good interaction with the 9 EMA. No interaction yet. And you can't just assume everything's gone without you, because a lot of times it's not. You can see this big momentum switch off for a minute or two, and then you've completely missed this right here. So I saw one. Previous bar highs right there. My risk is only 265, so I can put 2 on. And again, maybe we're wrong sometimes, maybe we're right, but there's a lot of momentum. And again, what are we looking for? We're looking for 60% sellers, right? Sell, 40% buyers, because it's not taking the highs, so sellers are in control at 60%. 60% sellers, 40% buyers, not taking the high. And then all of a sudden, we start to snowball, right? No buyers at all sellers, all selling. 80%, 90% selling. It's gone. I can break even. I don't have a low to aim for because it's not a reversal play. So I can go for 1 hour down here, 45 minutes. 45 minutes is there. All right, so push. You can see like at the 45-minute mark, we're starting to, that's 50 minutes, oops. Okay, so we would have closed somewhere down here, right? But it's starting to pull back, right? At the hour mark, it obviously starts to trade lower, but you're not gonna wanna give this back because it could easily keep coming against you. So obviously happy with that, right? That's it. And then you happen to also get a little bit of break theory, a little bit of confirmation, rip price up, you get a trigger, buy one, 600 risk, a little much. But we're playing profits at this point, so it doesn't matter. Little momentum play there, so you can add another one. I choked this stop up right below it. So now I've got 2 on for 160 in risk. This one doesn't really go anywhere, but you know, it's kind of one of those things where you can take profit when you're happy. We can try to go. Nah, it doesn't look like it goes anywhere. Right, so it's like, okay, did we get momentum? Not really. We're kind of lacking that momentum. Timing wise, from here to here, 45 minutes is actually right there. So you'd say, okay, 45 minutes, definitely breaking even. We're not really taking off here, right? So 45 minutes, make a management decision. Definitely would at least take one off. Yeah, gets averaged out. And then you get a big sell, so you're gonna close that. So I don't know. Anyways, I'm rambling at this point, but I think you guys get the idea, okay? Focus heavily on your confirmation candles from the right levels. Look for the trigger for a starter position. And then look for your very first 9 EMA for a scale in. Look for the open momentum play. Look for the open reversal play. And then focus on break theories after that. But I hope that helps you guys. Hopefully I don't have to edit this video because my kids came in. I'm pretty sure I paused it, but we'll see. Anyway, yeah, we'll see you later. Thanks.